Hey guys, welcome back to another video. My name is Akil Stokes. If this is your first time joining, I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. And this is a weekly video that I provide to you guys showing you what's on my radar for the week ahead, allowing you to see how I perform technical analysis in the market, and hopefully giving you some tips on how you can become a better trader. Now this week we're going to do something a little bit different. As you guys know, we just got finished a 4-day workshop over 10 plus hours of training. It's also my youngest second birthday, so I'm a little bit beat. So instead of me taking you around the markets, we actually have a trader that I've worked with for almost a year and a half now who really decided that he wanted to step in and do this week's video for me. And I'll tell you what, I just got finished watching it, and man, it's an amazing video. It is long, but if you are someone that is serious about really taking the next step in your trading, you're gonna watch the entire thing. Not only does he show you what's on his radar for the week to come, but he teaches you some very valuable lessons about what to do and what not to do, what to feel and what not to feel as a trader. And I think it's kind of cool because, you know, you guys watch me every week, and obviously I've been a consistently profitable trader for some time now, and many of the lessons that I teach, I'm reflecting on kind of past lessons that I've learned, past experience that I've had in the market. Well, this trader is currently going through that progression of going from a newbie trader to learning, to testing, to demo trading, to trading live, and he's experiencing these lessons kind of firsthand. So it's kind of cool to get a fresh look at it. So I'll let him do the introduction. I hope you guys enjoy. I'll also put a link to his YouTube channel below in the description box. He does about 2 videos each week, so trust me, you want to subscribe to his channel. And lastly, if for some reason you haven't heard about it, again, we did a 4-day workshop last week. The recordings are available. They will be up until August 31st. There's a link in the description box below as well. If you want to check out those recordings, again, it's 10 plus hours, so please don't wait until like August 30th to try and do it. Set up a schedule so you can watch a couple sessions a day and really allow the information to marinate instead of just going through one ear and out the other. So I hope you guys enjoy your weekend. I'm gonna go get ready to plan a little social distancing party, I guess, and I'll see you guys next week. Take care.
Yo, what's up everyone? How's it going? This is Raymond Jeffries. Firstly, I just want to say thank you for taking time out of your days to watch my video. Hopefully it's providing value to you guys and not only showing you what I have on the radar for the upcoming week, but also showing you how I go about doing my day-to-day analysis. So this week every video is going to be a little bit more special than the other ones. I mean, not that they're not all special, but this one's just that tiny bit more special because I'm actually getting to do a guest appearance on my trading mentor's channel and his weekend review video. My trading mentor is Akil Stokes. He's been my trading coach for a little less than a year and a half now. He's been my mentor for a lot longer than that. I, like many of you, have been watching his weekend review videos week in, week out for the past like couple of years, and just, you know, gaining the right knowledge in trading. I'm sure if you guys type in the search bar above and you put in Forex, you'll get a bunch of different hits of a bunch of different type of videos. You know, about trading strategies, or how I made profit, how I double my money and all this stuff. I've never seen Akil do any videos like that. He's just very straightforward with what trading is, and him making sure you go thinking about having the right mindset in trading. And that's kind of what I'm hoping to relay, and kind of the value I'm trying to give to people out there who are just getting into trading, or maybe been trading for a while and just don't have that right mindset yet, and just showing them what trading really is. So in this video, I'm just going to do a short little recap on my past week in trading. It's been a pretty active week. I was actually involved in 10 trades. It's funny because if you go back and you look at my midweek review video, if you look in the top left hand corner, it should be up there. It was actually a pretty difficult week. Not regards to, you know, I was following my plan, so it was a good week with regards to that. But I was over 4 at the time. And you know, if you asked me before, and you know, if this was me maybe about a year ago, maybe a year and a half ago, I probably would have been all in my head about, oh man, I don't know if I want to take this next trade. What if it's a loser? And this week, if anything, really solidified for me why traders lose. And it's not the strategy, it's not the system that fails, it's the trader. And the reason why this week just confirmed that for me was because I ended the week, with 3 winners in a row, and which completely made up for my previous 4 losers. And this is one of those things where I would have been hesitant before. And you know, if this was me, like I said, a year and a half ago, I probably would have not taken that next trade. And I would have been kicking myself because that next trade I ended up taking up for all my losses up until that point. And we're going to get into that in the video because I really want to show you, because it's a prime example of making sure you follow your plan. And it's not the system that fails, it's the trader. And I've never had that more solidified in my mind than this past week in trading. So what I have on my radar for this upcoming week, I have a mix of things. I have a couple patterns, I have some structured trades, and I have some trend trades on the radar. Sorry, it's a real mixed bag of what I have. So no matter what you like to trade, there's going to be something in here for you. I always recommend, if you guys are a certain type of trader, it doesn't hurt to look at other styles, not necessarily to incorporate in your trading, but to get an idea of how the other trader views the market, because that can only make you better as a trader. And now with that being said, let's hop in the charts. All right, so let's hop in these charts. So the first pair I have on my radar, and that is the pound dollar. So looking here at the pound dollar, what I do is I do a top-down analysis. I start off on the daily and work my way down. You can kind of see here, we broke this level of structure right here looking left. Price has basically been on a tear since that point until we hit this level of structure right here. We actually broke above this level of structure this past week, but if you look a little bit further left, you can see that we're still at a level of structure. So one thing you'll notice is structure upon structure. If you're not a structure trader, you don't care. But for me, that's something I definitely pay attention to. But ever since that point, you can see we've basically been channeling sideways. If you go down to the 4 hour, you get a clear view of what I'm talking about. You can see here that price has been making higher highs until this point. So made a new structure high. Oh wait, let me get the arrow. Sorry. New structure high. Outside return. New structure high, outside return. We're currently in an outside return. So what I was looking at is I was looking for price to come into this area right here to give me some type, into this kill zone, to give me some type of buying opportunity to get a retest of the highs this past week. So what ended up happening was, if you watched my midweek review video, I was looking at price to come into this little area right here for an initial entry for some type of trend continuation setup. And I got that on the 15. I did get a double bottom right here where price confirmed a double bottom. I bought it and it ended up being skunked out almost immediately. That is what it is in trading. It was my 4th loss in a row. And like I said, me a couple years ago, I would have been really hesitant to get back involved in a trend continuation trade because, you see this strong momentum. You kind of talk yourself out of, even if it's in your plan, it's part of the setup, you talk yourself out of these trades because you're scared. And what I've learned is I've learned to kind of take fear out of trading, and I don't fear losing anymore. I fear more not taking a valid setup. And this was a valid setup for me. So price came into this little area structure right here, this little kill zone that I was looking to get involved, and price basically hit a higher high, higher close. So on this type of setup, like I said, I'm still looking for a retest of the highs. I'm still looking for a retest of 132.52s, but because it's a nice even hand, I like to get a couple pips before that. So I had my orders at 132.48. And like I said, I got involved on this candle. This was my trigger candle, a higher high, higher close. Price was overbought. So it was a nice setup for me. I had my stops in ATR below the lows right here, which was 74s, which at the time was about 30 pips, about 27 pips. So 27 pips below 20, about low 74s, about 30, it's about 44s. 47s. All right, so 47. So I had about 130.47s was my stop. So as you can see, it was a pretty decent risk reward. This is what my risk was looking like, just to kind of give you a clear view. This was what my risk was looking like. Paint that red. And this was what my reward was looking like. Like I said, I was looking for a retest of the highs because that's the way I tested it. And it was, you can see, it was a pretty decent risk reward. Ended up being about a little more than a 2-to-1 risk reward. So I ended up getting involved with this trade. It wasn't a pain-free trade at all, as you can see. Price almost, not immediately, but price went against me. And like I said, if this was me a year ago, I would have been really scared at this point, even though my trade was still completely valid. My stops weren't hit. Price was just testing this little outside return right here. I might have been scared and got myself out of this trade, or price would have came back, retested where I got in, and I would have got out right there. Or you can see, like I said, price broke above, there would have been a lot of happiness in that, but as you can see, price immediately came down to below where I entered. And I know a lot of traders, because I was a lot of traders before, would have exited right here in fear of, the market's definitely going down to stop me out. So what ended up happening is, you can see price reversed and ended up hitting targets. And you can imagine how a lot of traders would feel. Imagine how I probably would feel if I didn't get involved, if I got out of the market right there. Price actually had some type of head and shoulders right here. Looks something like this on a lower, somewhere evident on a lower time frame, but still head and shoulders right there. But yeah, so you can see it was the importance of following your plan. I backtested this. I know this is profitable over time. Each trade is independent. Each trade is, you don't know whether it's going to be a winner or loser, but I know if I follow my plan over a sustained period of time, that it's going to be profitable. And, it worked out for this, and this trade just kind of cemented it in my mind because there were a number of opportunities where if you asked me before, I would have either not gotten involved or I would have exited the trade without my trade ever being invalidated. And that's the mistake a lot of traders ended up doing. So what ended up happening later on in this trade is so what I like to do is I like to map out these levels of structure right here. So this is my level of structure that was created right here. And this is my level of structure to the upside. All right, so price came up, stopped me out, and I immediately was like, okay, well, I'm not looking to look, like I said, I don't trade continuations past structure because that's the way I trade. I look for retests, and I got that set up. So now at this point, I was looking for a counter trend setup. And at this point, where price came up this way, you see it was a strong move up. We had a doji and we had a high test wick candle right here where we tested the highs, and then we had a lower close on that candle. Me, I'm aggressive, especially on the pound dollar on my structure trades, and I ended up having my stops an ATR and a half above the highs. So that ATR at the time was about 15 pips, so I had it about 15, it was a 49s, sorry, it was 59s right there, sorry, 54s. So I had it at 69s. I don't like to have it at 69, so I had it at about 77s. So this was where I had my stop. This is where I placed my stops. And depending on the type of trader you are, I'm aggressive on these type of trades, so I was looking for a retest of the lows. Or not like a retest of that next level of structure. Some traders would have gotten out right here, which would have still been a really good risk reward on this trade. So as soon as I got this confirmation of the lower low, lower close, this is where I got involved right here. So this would have been the stops, and this would have been either target one, or if you're more aggressive, this would have been the secondary targets. And like I said, this just reinforced the importance of following your plan because these two trades basically made up for my whole week of losses plus some. And it's important to, if you're going to be consistent over time, is to take these setups consistently, even if you are in a losing streak or whatever it may be. So now I'm asking myself, okay, now we're at this point in the market. What do I have on the radar at this point? What am I looking at? What I'm looking at currently is now that we're at this lower level of structure, I'm looking for another structure trade. You can see here that prices come down. We test this lower level of structure. I'm looking for a CTS style. So what that means is combined technical score is where you combine different facets of trading to combine it into a score which you can kind of grade your trade, and which was similar to the trade I had up here. So what I'm looking at this. I like the price action on this. I like the low test wicks. I like the fact that we're channeling sideways. So basically, price came down, come and tested it, and we might be double bottoming right here, which would only give me a higher CTS score. So the score I have on this, I have a CTS 1 because I'm at a level of minor structure. I have a price has gone oversold. I have a minor level of I have minor divergence here on the RSI, so that's 3 points. I'm looking for fib confluence. So if we go from the lows here to the highs, right there, I have another point because I have fibs line a little bit lower, but it's still lining up below. So I have fibs lining up right there. So that's 4 points. I don't have any confluence. I don't see any ABCD patterns in here either. And I also have higher time frame confluence here because I know we're in a bullish trend. I'm taking a bullish, technically counter trend trade, but it's with the trend. So that's 5 points. And I also test for a psychological number. So if we look here, the way I test my psychological numbers, and I have tested, if I come within 10 pips of that testing of that psychological number, I count that as a point. And as you can see, price tested 130.59, which is within 10 points of 130.50. So that's another point for me. That's 6 points. And if we can come down, get some type of double bottom here, that would be 7 points. So the way I trade this is I'm looking for a retest of the highest high, the highest close, I mean. So it looks something like this. I got triggered in on this candle right here, the higher high, higher close. My stops are an ATR below the lows, so I think it was about 30 pips at the time, 33 pips at the time. So 33 pips, right there. So no, wait, it was right there. Yeah, about 30 pips. 30 pips below the lows. So about 59, so about 29s. 29s are my stop. So this is what my risk reward looks like. And you can see if you can get involved in these type of structure trades, you can get a really good risk reward. I mean, like I said, it all depends on the type of trader you are and how aggressive you are. But this is what it looks to be a good one, a little more than a 2-to-1. If you're a little bit more, if you're not as aggressive and you're maybe looking to get off at this level of structure right here looking left, it's still a good risk reward. So say if you're a little less aggressive, you want to get off maybe partials right here, you're still looking at a little more than a 1-to-1 risk reward, maybe about a little less than maybe a 1.25. So, that's different ways if you're looking at this. Like I said, I'm already in this trade currently. I would only confirm it more if we get some type of double bottom, but this is still an opportunity to get involved. With that being said, the next pair I have on my portfolio on my radar is the Euro Yen. All right, so here looking at the Euro Yen. Starting off on the daily, you can see that price broke this level of structure right here looking left. You see we came down, retested it, made a new structure high right here. If you look left, this is a pair we've been hitting the past few weeks. You can see that we tested this level of structure where I was expecting price to go, and we have since retraced off of that level. I was overall expecting price to come up to this point, this level of structure up here, which we still might, but we're retracing off this point, so let's see what we have on the radar. So we're going down to the 4-hour. You can get a clearer view of what I'm talking about in regards to the trend that has been in place. New structure high, outside return, new structure high, outside return, new structure high, and we're currently in an outside return. Looking like we're testing that. We're currently testing that previous outside return. What I like to do on these type of trades, what I always recommend newer traders do, I know I still do it to this point, is I like to map out my levels of structure. So I know this is a level of structure up here, and this is a level of structure right here. And these are the two important points in my trend where I know if either of these two are invalidated, whether we break above here, we break below here, I know that the trend is either violated or it's a continuance of the trend. So coming down to the hourly, you can see what it looks like. So when in my midweek review video, I had a couple patterns on this particular trade. On this particular pair. I had a Gartley right here that didn't complete. It was something that looked a little something like this. Looked something like this. That never ended up completing. So what I ended up getting involved in is I ended up getting involved in this little Gartley in the midweek that I went over. Something like this. It ended up being like a one target winner down here. So that was a nice little. That was one of the 3 trades I went over in the beginning of the video. So what am I looking at on the radar now? I'm actually currently in a bat on this, a bullish bat, something like this. Go to XA. This is my impulse leg. Make sure I get at least a 50% retracement right here, which I did. On that B to C leg, I get at least a 382, which I did right here. And then a completion down here at the 886. So what that looks like is X to A to B, B to C, and a C to D completion right here. So I'm currently in this trade right now. We'll see what happens. I know I'm looking for a retest of the highs. Depending on the type of trader you are, this is the beauty of trading. You can kind of mold your trading how you want it to be. If you're a little bit more, if you're not as aggressive as I am, you can look to take targets right here at this previous level of structure, which I think should line up well with the 382 retracement. Boom, right there, perfect. And actually, if you look a little bit further left, that actually lines up with this level of structure right here. And I don't know if you guys know this, if you guys can see it. If we're on a higher time frame, it's probably easier to see on the 4-hour. This is actually setting up as a head and shoulders as well. Because we had such a deep retest on this retracement here, it's setting up. So it's setting like this, something that looks like this. And it goes ahead. And if we can get a retest of this, this is setting up for a head and shoulders. So if you're taking this as a trend trade, which I am taking it as, I have to be mindful that this could be setting up to be a head and shoulders. I'm not looking for a trend like I went over in my midweek video. I'm looking for just a retest of the highs, and I have to be okay with price coming here and rolling over. That this is one of the bigger trades for me. So if price comes here, rolls over, then I'm gonna get stopped out, and I have to be okay with that. you know, that there's no better or worse in trading. It just is what it is. There's pros and cons to each thing, that's something I've learned in my trading. I'm looking for a retest of the highs. As you can see, it's going to be a pretty big trade for me, and I'm just treating it as a trend continuation setup. I'm not looking for extensions past this point. I'm just looking for a retest of the highs. A lot of traders out there would be looking for a retest of 382s, and then what they could do is they can look for a retest of the 382s for target 1, and then look for a target 2 up here at the highs. Me personally, in my trading style, I'm a little bit more aggressive on my targets, and especially with a really good risk reward like this, I'm looking for a retest of the highs, because for me it's still a trend continuation setup. Yeah, so that's kind of what I have on the radar on this. If we do happen to break a little bit lower here, if you're like I said, if you're not a pattern trader, you could look for some type of CTS style, like a structure-based trade down here. The only thing I wouldn't like about that is if we came down, we got some type of double bottom here. Depending on the type of trader you are, we'll have this level of structure right here, right into it. So there wouldn't be a lot of room there for me. And if we do happen to break lower, then that's fine too. If I get stopped out on this, that's okay, because then I'm just looking to get involved in some type of retest and then trade lower. So you have to be flexible as a trader, and that's the benefits of having an expanded toolkit in regards to the way you trade the market. Yeah, so with that being said, the next pair I have on my radar is the euro dollar. All right, so starting off here on the euro dollar, you can see that price has basically been on a tear higher, but ever since we hit this point, we're kind of in this little channel right here. If you go down to the lower time frame on the 4-hour, you get a clearer view of what I'm talking about. You can see we did make a new structure high right here, and we have since been retracing down. So this is something I went over in my midweek video, where we were channeling after we broke that level of structure. Like I said, we made this new structure high up here. Price then began to have this little wedge that appeared, and because I'm not a breakout trader, I really couldn't get involved. I was waiting for some type of break either above or below, and then getting involved with some type of retest. But as you can see, price did break below. And if I was looking for targets, this is the area I would have been looking for, this level of structure right here. As you can see, price basically just went straight to that level right there. So, at that point, I was out of the trade. I wasn't looking for anything in particular. And so what I do have on the radar currently on this pair, like I said, what I like to do is I like to map out my levels of structure. So this is my higher level of structure right here. I like to map it out in red. And this is my lower level of structure down here. All right, so I know these are basically my 2 points of structure on the chart. And anything in between here, doesn't really matter in regards to validation or invalidation of the trend. So what I'm looking at here is I'm looking at a cipher pattern, which I have setting up. It looks something like this. If we go from here, make sure we hit a 382, which we do. And then we hit make sure we hit a 127 extension right here, which we do right there. And then we go from X to C to get our D completion at the 786 up here. So right there, so we have an X to A to B, B to C, and a C to D completion right there for our completion of a cipher pattern. So if price does happen to break up from here, and we can see if we want to get short against this level of structure. If you're aggressive, you could wait for price to come into the zone. If you're, like I said, you're a little bit more conservative with your entries and you don't want to take an aggressive entry on this cipher pattern, you can wait for price to form some type of double top up here. I can't estimate where targets would be at this point because we have to wait till price gets to that point to determine. But what you could be looking for, if you're looking for price to come down and test this level of structure lower, this is something I might be looking to do in this upcoming week. Look for price to retrace a little bit more. Let me erase the charts real quick so it's a little bit more clear for you guys. So you can see that I'm not looking for, if I'm looking for price to come down here and test this level of structure, I'm not looking for any type of extension past this point. So I'm looking for price to come down and test this level of structure, I could be looking for some type of trend continuation trade to hit that level. So what that would look like is, so price is coming here. We see price looks something like this. Broke this level of structure here, and we're currently trading back up into this level. So what you can look for is you can price to form some type of double top here and then play it for a move lower. You can play for a move lower to this point right here where you can just take a retest of the lows, or if you are expecting this level of structure to get hit, is you can play for a move lower until this point right here. You know, we don't know where price is going to reverse in this zone, but this is just something if you more like a day trade, look to get involved in, like I said, a retest of here or a test of the lows. If we do manage to come down and test these lows, what I'm looking for is I'm looking for some type of double bottom for some type of structured trade. So if you take this, it depends on how aggressive you are with your targets. If we can get some type of double bottom, I can look for targets right here initially at 117.60s. You can get a pretty decent risk reward on here. If you're a little bit more aggressive, you can shoot for a move across. This is, for me, isn't like the pound dollar. I'm not looking for a complete move across or anything like that. I'm just looking for a retest. And you can see we actually have a head and shoulders possibly setting up on this one as well. Like I said, you can shoot for this level of structure here or wherever this level ends right here for another. If you're a little, like I said, if you're a little more aggressive, I'm just looking for a retest, something to get quick in and out of the market right there. And then play it off of that, like I said, play it off of that point, get a good risk reward down here. And if price does break lower, like I said, that's fine too. If price breaks lower, all we do is we go to the higher time frame, kind of get a view of, okay, so if price breaks this level of structure, where do I expect price to go? We have a little bit lower level of structure right here, so I wouldn't be looking for extensions. If we do manage to break that point, then I look a little bit further out and kind of see market has been basically on a tear. The next big level I can see on here would be right down here at 114.25s ish. That's that last level before price kind of went on that tear down here. But, we are going to have levels of structure on the way down. But this is the main level I would be looking to get tested if we do manage to break below here. So that's what I'm looking at on this pair. The next pair I have is the dollar CAD. All right, so let's look at the Aussie CAD. So let's see what's going on here on the daily. We can see recently a price broke this level of structure right here looking left, and it's pretty much been since dribbling down. The next clear level of structure for me looking at here on the daily would be down here at 129.52s in this area. So this is where I'm predicting market to go. So now that I made that prediction, I can go down. I know I'm bearish. I know we're in a bearish trend. Okay, now ask myself, how do I want to get involved in the market? You can see here clearly price has been making new structural lows, outside return, new structural low, outside return, new structural low, outside return, new structural low, and we're currently in an outside return. So like I said to you guys and previously, I like to map out my levels of structure so it looks something like this. This is my level of structure to the upside, where I know if we break above this, then we're no longer in a bearish trend. We're in a bull rotation. If we break below here, this level of structure, I know that it's a signal that we're going to continue on the bearish trend that we're on. And while we're in between this zone, we're in consolidation, or I'm looking to get short because we're currently in a bearish trend. It just kind of helps map out on the charts what I'm looking at. I actually got involved in a bearish trade right here. So I looked for a bearish trend continuation trade right here. So this was my entry candle right here. I was looking for a retest of the lows. This right here is my entire kill zone right here. But I was looking at this tinier kill zone right here to get involved in. So as you can see, price came up, tested with this nice price. So I see this and I see a nice high momentum move into it, a high momentum candle, a nice high wick candle right here, and a lower close. So that's what I got involved in right here. And the way I looked at it, okay, so I got my ATR, I got my stops above here, 20 pips. 20 pips above the high right here is 27.47s, but it was my stop, but I had it a few pips higher because I wanted it above that 50s handle. So I had it at 52s. And this is my area I'm looking to get involved right here for targets. So this was, at least for me, I wanted to make sure it's at least a 1-to-1 trade, which it is. And I'm looking to get involved. And like I said, it hasn't been pain-free. As you can see, price did channel higher from that point, but price action was doing what I wanted it to do. And that's something you have to understand when you're reading a chart. Just because price is moving against you, it doesn't mean that price action isn't doing what I wanted to do. I can see that as we were moving higher, we were having lower momentum on the RSI. We had a nice high test wick candle right here again, but this level of structure was holding, and we had a lower low, lower close. We haven't hit targets yet. I'm still, like I said, I'm still currently in this trade. We'll see. I'm waiting for a test of this lower low, lower. I'm looking for a test of the lows here to get out. But if you're not currently in this trade, there are a few things on the radar. Say I do get stopped out here, price ends up breaking this level of structure higher. I actually have a cipher pattern on the radar. What it looks like right here, we go X to A. We hit at least a 382 retracement right here. And then we go from that X to A leg again. We do a extension, Fibonacci extension, to make sure we hit a 127, which we clearly do right here, and we don't break below the 1414. And then what we do to complete that pattern is we go from X to C, and it's a 786. So this would be the completion point up here. What that looks like is look something like this: X to A to B, B to C, and a C to D completion right here. So that's something I'm looking at. If, like I said, if I do get stopped out, price does break above, I'm looking to get involved in this. And on the downside, or sorry, not the downside, but if price does break lower, break this level of structure right here lower, and I do happen to get filled for my targets, we actually have a Gartley pattern setting up. What that looks like, it looks something like this. We go from X to A right here. And this is actually a really nice Gartley because it's a really deep Gartley pattern. You can see price tests the 618, does not touch the 786. We make sure we at least get a 618 retracement right here on that C leg, which I can eyeball and see we did. And then from that point, we look for a 127 extension from that A to B for our D completion, which looks something like this. So we have an X to A to B, B to C, and a C to D completion down here. As you can see, it was a really deep Gartley. It's a nice risk reward on this trade. I use a 113 for my stops, so that's going to look something like this. So this is the entry point right here. This is what it's going to look like, risk reward wise. So this is going to be my risk right here, and this is going to be my reward. On this particular pattern, I'm not looking for extensions on this. I'm just looking for conventional targets, a 382, which is going to look something like this. So this is my targets. So right there, let me map that out so it's easier to see. Let me actually take that off because I might be mixing in there. And as you can see here, we actually get a pretty good risk reward. It looks like it's about roughly a 2 to 1. It looks like 1, 2, a little more than a 2 to 1 for that initial target. And if we are looking for extended targets, that second target would be the 618, and that's up here, and that looks a little something like this right here. Map that out, and that, as you can see, that's a pretty good risk reward as well. So that's something I have on the radar for this pair. The next and last pair I have is the dollar yen. All right, so the analysis here on the dollar yen is going to be relatively quick. I don't want to make this video too long for you guys, take up too much of your weekends. But as you can see here on the daily, what we've done recently, price came back up, tested this level of structure, but we recently tested this level of structure right here and bounced off. And when we go down to a lower time frame, you'll get a clear view of what that looks like, and it looks like this. It looks like a head and shoulders setting up. Like I said, what I like to do is to map out my levels of structure. This is a level of structure right here, and this is a level of structure right here. But what the head and shoulders looks like is something like this. Here, the head, and right here is the right shoulder. I like the fact that we broke this left shoulder right here on this level. So basically we broke this level of structure. It just kind of verifies for me, or just kind of helps me show that we're I'm more likely to be bearish on this pair, and looking for a retest of the lows and possibly a break below lower. But if we don't get that break, when we come down here to the hourly, I have a few things on the radar. I have a bearish bat that's setting up. If we go from here, if we go from X to A, if we happen to break higher, right here, we hit the 50%, we at least hit a 382, and a completion up here at the 886. Looks something like this: X to A to B, B to C, C to D. Oh, sorry, let me get that in here. Sorry, tool's messing up. C to D completion up here. But we also have a pattern on the other side. We have a bearish Gartley, which is another deep Gartley, similar to the dollar CAD. You can see right here, we hit the 618. We at least hit a 618 on this return. And we do a 127 extension from that B to C leg. That looks something like this. And our D completion is the 127. So that looks something like this. X to A to B, B to C, and a C to D completion down here. So you can see we have patterns kind of both ways on this market, depending on basically how this head and shoulders plays out. If we can break lower, like I said, I would get involved in this trade right here, because I would get involved in either of these actually because it's part of my plan, so it doesn't really matter. I trade patterns on this pair. I trade both the bat and the Gartley. So if we do get a move down here, I would get involved in this Gartley. Like I said, it's not one of those pairs I would be looking for extended targets, kind of like I was showing you on the Euro Yen, where if I'm looking for an extension up, because we can clearly see we're not in a trend. We're not in a bullish trend at least, and we're not really in a bearish trend either. So I'm just looking for conventional targets. If we get it down here, I'm looking for a 382 and a 618. If we get a move up here, I'm looking for the same, a 382 and a 618. And if we do happen to break below here this week, like say we come down, and then, like I said, it's good to plan this stuff out. So we come down, we break below this level. Say I hit target ones, if that happens, good. If not, then that's fine too. Say we just have it, market just rips lower, stops me out. We break this level of structure right here looking left. Then you ask yourself, okay, well, we broke this level of structure. Where is market likely to go next? The next clear level of structure for me is down here. Map it out. Down here around 104s 40s to 104s 10s in this zone. So you ask yourself, okay, well, I'm looking for market. Market broke this level of structure. I'm looking for a move lower. Look to get involved on a retest and play it for a move down. Or, you can play it for a retest here, or you can trade it on the way down to this level of structure next. And yeah, that is the way I plan on looking at this. Like I say, it really is dependent on how the market reacts and how the market trades. That's the whole thing with trading. You make these predictions, so you're planned ahead of time for any scenario. So when that scenario arises, you're not like sitting there. You're not like, oh, what do I do next? You kind of already have a plan in your head of how you want to attack the market. Alright, so that is the end of my weekend review video. Hopefully it wasn't a little too long for you guys. I'm a bit of a nerd when it comes to talking charts. I can literally do this all day and doing analysis. Hopefully you guys got something out of the video. Hopefully you guys got the importance of backtesting your plan and following your plan. That's the most important thing. Because as you can see in my video, if I missed out on that pound dollar trade because of fear of losing again after my 4 losses, I would have missed out on a trade that would have covered all of my losses for the week. And I would not have had a profitable week. And I think that's the thing that a lot of traders fall into. That's the trap. The trap of that fear of losing another trade, and they end up missing out on the trades that would have covered those losses. So, don't be afraid of taking losses. Losses is a part of trading. It's going to happen. If anything, you should be afraid of not following your plan. So always follow your plan. If you're scared to follow your plan, ask yourself why you're scared to follow your plan. Did you backtest it? Do you know it's profitable over time? These are important things to understand when you're trading. Lastly, I want to give a big thank you to Akil. Thanks for letting me be a guest host, make a guest appearance on your Trading Edge video. It's really big for me. Like I said, I've been following Akil for years, so for me this is big. This is really important to me, so thank you for that. It truly is an honor. If you guys got something out of the video, go ahead and hit that like and subscribe button down below, so that way you guys don't miss any more of my future videos. With that being said, have a great weekend, and I will see you in my midweek review video. Alright, have a good one. Bye.